It's the first one for the week. Welcome to 55 minutes of going round the world of business. It only happens here on Business Incorporated. Here's what's coming your way in the next 55 minutes. We'll look at cross-border payments in Africa, some of the challenges and possible solutions. And then we move over to Ghana, where that country is planning to open a refinery to process manganese. And then the auction calendar for the second quarter of 2024 is out for the fixed income market in Nigeria. We'll see the auction results from last week and what to expect in the coming days. Good afternoon. Welcome to Business Incorporated. I'm Amy John Mekwa. Well, we start out from the global space. Oil prices edged low on Monday after oil cartel OPEC Plus agreed to extend voluntary output reductions until the second quarter, and that's in an effort to support the short-term stability of crude markets. Global benchmark Brent slipped 0.05% to $83.52 a barrel, while U.S. West Texas Intermediate crude futures traded down 0.19% at $79.82 for a barrel. OPEC Plus announced on Sunday that the 2.2 million barrels per day of voluntary output cuts that were planned for the first quarter of this year will continue into the next quarter. OPEC Plus kingpin and de facto leader Saudi Arabia said it will prolong its voluntary cut of 1 million barrels per day until the end of the second quarter, and that's according to state-owned Saudi Arabia press. Riyadh's crude production will stand at approximately 9 million barrels per day until the end of June. The extension signals robust determination to defend the price floor above $80 per barrel in the second quarter. And he said that if OPEC rapidly unwound the cuts, oil prices will drop to $77 a barrel in May. Now, for the grain space, Chicago soybean futures extended gains on Monday after last week's three-year lows, but plentiful supply from South America and weak U.S. exports limited gains, while spectators still bet on lower prices. Corn and wheat futures also rose, but with markets well supplied, both contracts were near their lowest since 2020. The most active soybean contract on the Chicago Board of Trade was up 0.08% at $11.60 a bushel after dropping to $11.29 on Thursday, and that's the lowest since November 2020. CBOT corn rose 0.8% to $4.28 for a quarter of a bushel, having slid to about $4.04 on February 22nd, also the lowest since November 2020. Wheat gained on the other side, 0.3% to $5.50 for half a bushel, but three-year low of $5.40 after prices fell to 3.2% on Friday. A plentiful supply of soybeans from Brazil, corn from the United States and wheat from Russia have prompted speculators to build up huge short positions in all three CBOT contracts, and that has driven prices lower but left the market vulnerable to bouts of short covering that could accelerate upward price moves when they happen. Global corn stockpiles are set to reach 5-year highs later this year, 2024, undergoing their largest annual expansion in 7 years. In the metal space now, gold prices lingered close to a 2-month high on Monday after softer U.S. economic readings last week cemented prospects of an interest rate cut in June by the Federal Reserve. Spot gold edged 0.1% lower to $2,081.11 per ounce, but hovered near $2,088.19, a level seen on Friday when the contract hit its highest since December 28th. U.S. gold futures fell 0.3% to $2,090. The next major U.S. economic release will be February's employment report, which is due this Friday. Spot platinum fell 0.7% to $888.35 per ounce. Palladium rose 0.1% to $956.53, and both metals have fallen more than 10% so far this year. Platinum mining companies in South Africa are caught up in a crisis as the autocatalyst metal whose price is dwindling. Spot silver fell 0.4% to $23.06 per ounce. We come to Nigeria now, where the Federal Competition and Consumer Protection Commission, that's the FCCPC, has been meeting with stakeholders in the electricity sector to activate and deal with challenges through the Electricity Consumer Complaints Resolution Platform. The latest meeting, which involved Ikeja Distribution Company and their customers, was another opportunity for residents in Lagos to share their experience with the acting executive chairman of the FCCPC, Mr. Adamu Abdullahi.
An elderly man came, and as they asked him to explain,
all these complaints have always been about the one that we have been addressing here also. Same thing that has been the complaints all over the country. Regards overbilling, community transformer problems, regards metering. Should I be looking at you, madam? Regards metering, regards disregard for regulations from NEC with respect to disconnection, energy capping, tariff band classification, and your forum rulings. Other issues also to do with account reconciliation, adjustment bottlenecks, disconnection without notice, billing before connection of new property to electricity, and others. So as you can see, these are issues that are very serious to consumers, and of course they would like to have them resolved. Most times the disco has not been forthcoming, and that's why the complaints are normally brought up to NEC and then to the FCCPC, which is more or less a last resort. That's apart from the courts. We are here to try and resolve this issue. That's why we give this number of days. So we sit down with complainants and the people who would normally resolve these complaints. You see that the disco itself, of course, or if it's escalated to the forum, NEC, or NEMSA, if it's a metering issue.
Well, the FCCPC has said that consumers are free to make complaints to them concerning issues around electricity supply and appliances, and they hope to take that up. And we hope to follow up on some of those issues that have been raised, not just with Ikeja Disco, but also Ibadan and other parts of the country where FCCPC has visited. Well, it's not just about taking the complaints. Obviously, it's about getting the solution. So that's why we'll follow up with FCCPC on that. Now, we move to another issue, and that's cross-border payment. Of course, we are very concerned about cross-border payment within the continent because we have such a huge potential in NAFTA. But how much of that can be explored if payment becomes a challenge? In 2022, about 40 million Africans living outside the continent made about $100 billion in cross-border remittances through different channels. But making those payments within Africa becomes another challenge. You don't have to take my word for it. I've said it a couple of times. I've also had the experience. But let's have joining us from our Abuja studio, Aro Leonard. He's the founder of Clivaro Communications. He's just had an experience coming back into the country, trying to make some payments outside Nigeria with a Nigerian card. So I'll just allow you say it. Aro, good afternoon and welcome to the program. Could you please share your experience with us?
Good afternoon, and it's good to be here. It was quite shocking for me because my Visa card, I had used it outside the country before. In fact, when I first used it was in Dubai. And there, I wasn't very sure then. And I was trying to do some conversions, dollar conversion, and the shop owner, an indigene of Dubai there, just told me, hey, you don't need to do that. Just, don't you have your Nigerian Visa card? I said, yes, I do. Use it. We'll use it on the POS, and bim. And I could purchase anything I wanted to purchase, came back into the country. So I believe that was something that was normal, because we know Visa cards, MasterCards, you use them everywhere. But only for me to get to Ghana last week, and it was strange. You know, got to the airport, you know, tried all the ATM machines there. First 3 of them rejected the card, they could not pay. And then I saw UBA machine. I said, oh, okay, good, we have a Nigerian bank here. And I tried it there, the same thing. And it was strange. So I couldn't use it, I couldn't withdraw anything, and I didn't have local currencies to use. You know, a good Samaritan who flew with me to Abuja, I didn't even ask him any question. You know, there are very good Nigerians everywhere. You know, he just told me, hey, you're having challenges. I said, yes. He had to use his US card to withdraw. And he says, hey, don't worry, what hotel are you going to? I'll pay your cab to the hotel. And he did that for me. You know, and then I got to find out that there's some really modern black market alternatives for me there, where I would have to lose about 200,000 naira for every 100,000 naira I try to withdraw there. So it's really funny, because if we say we're talking about integration, you know, within West Africa setting, like my travel, you know, traveling from here to Ghana through the airport and everything was just as if I was going from Abuja to Jos or Lagos to Abeokuta. It was stress-free, easy. At immigration, everything was just normal. So why would there now be a barrier when it comes to using your card to purchase things? And you can imagine the number of Nigerians doing businesses there. And the cab guy that took me, he said, this just started not too long ago, and that was around 2022 or thereabout. And when it first started, sometimes it works, sometimes it doesn't work, but these days, it just doesn't work. So it was a really funny experience for me, if not for the fact that, okay, one had some dollars, one would have been, you know, stranded. And if we're talking about pressure on dollar, why would I have to try to get the hard foreign exchange dollars that we are trying to stabilize? Why would I have to withdraw that each time I want to go to somewhere like Ghana?
Just a neighboring Ghana here, but
it's strange.
Yeah, so let's talk to Jacqueline Juma. Jacqueline Juma is the Director, Advocacy and Capacity Development at Africa NENDA. And Africa NENDA is very much into payment systems and all. She joins us from Nairobi, Kenya. Hi, Jacqueline, good afternoon. Hello, Jacqueline, can you hear me?
I can hear you. Can you hear me?
Yes, I can hear you. I hope you heard Arrow's experience. Could you tell us what's going on here? Why is it so? And we've been at this for a while. I know there's PAPS. PAPS is supposed to make payments across borders seamless, especially for trade and commerce. You know, so why does it seem so difficult? And now he just came from Ghana. Just Ghana is how many hours away from Nigeria, and he's not able to use his card. What are we missing?
Very well said. It's true that there are some challenges right now. To my understanding, there's what we call the tight exchange rate controls currently happening in Nigeria, sparked by a plunge in foreign exchange revenue. And therefore, Nigerians who are Naira card holders are not able to conduct transactions out of the country, either through ATM withdrawals, online, making online payments, or even just paying from a point of sale, which is the POS. This is a policy issue where these stringent measures have been deliberately, put in place to try and save the situation when it comes to this dollar or foreign exchange shortage. There are other challenges around or barriers around operations, for instance, which include different systems, which is the payment systems. And I'm speaking to retail payments because retail payments, as we speak today in Africa, are the ones that really have a long way to go in terms of the infrastructure that creates seamless payments. The barriers around this challenge have to do with cost implication of having different systems speaking to different systems, whereby you need a middleman. For example, entities that provide API integrations so that these payment systems can speak to each other seamlessly. And with that, there's a cost implication. In fact, in sub-Saharan Africa, this is the most expensive region, despite there being the AfCFTA protocol and we looking forward to a single market and the ease of trade in the region. So in terms of digital payments transactions, it makes these transactions an average of, costing an average of 7.8% of the value that is being transacted, let alone the barriers that have been purposely put to save from the foreign exchange costs. The other challenge has to do with cash is king, of course. So many and not only for remittances, for instance, also what we call the retail person to business. So whenever anyone is making a merchant payment, you're making a payment through a POS, for example, across different markets. It's a challenge because the use cases, that is the person to business and business to business use cases, have not been enabled. So the infrastructure is not supporting some of these use cases. So these are some of the challenges that we are seeing. And for me, it's a call for some sort of policy harmonization across countries in Africa, especially in anticipating the AfCFTA protocol, which is opening up the space for trading and business. Because it's not only when, at the moment, we are trying to encourage the MSMEs to move into that fold. And so making payments, either a remittance transaction, which is the case of my colleague in studio, or when you're making payments for particular goods and services. So all these require robust infrastructure to speak to retail payment systems, and it starts with policy harmonization in the continent.
So what's up with Pan-African Payment and Settlement System, that's PAPS? We celebrated it, we're hopeful. This infrastructure has stopped it from working, or is it on a pause, maybe from Nigeria's part?
Okay, it's not, to my understanding, they're still building the rails for the wholesale, which is the large value transactions. It's working very well. Where there's a gap still and where there's a lot to be done is in facilitating retail payments, which are, the example, and, my colleague in studio has provided an example. These are transactions that are individual transaction, low value transaction, but they're the majority in the continent, given the market base for MSMEs and, whenever you need to do remittances or even just small value transactions, that's the largest chunk. So I think there's a lot of work that needs to go into ensuring that this infrastructure supports the low value transactions and also adhering to some settlement challenges, because at the moment, because of the fluctuation in the dollar pricing, there's a lot in terms of work that needs to go behind the scenes to make this infrastructure work, from both enabling these transactions to go through, and at the same time to facilitate settlement so that the transactions are instant and useful to individuals as well.
So, Jacqueline, it doesn't sound like ECHO is going to work anytime in the future. The common currency that was being, talked about a bit ago.
I wouldn't say so. The problem with me defining the future, there is the problem, because the future can be tomorrow, the future can be next year, or it can be 10 years to come. It has taken a long while, for instance, for the AfCFTA protocol to be adopted. It's been a journey, ensuring that all state parties are working together to ensure that everybody's endeavors are, considered in the protocol. It's the same thing when it comes to ensuring that this infrastructure speaks to the different requirements for all the markets, for instance, and especially from our low value transaction. For the high value, I'm not worried because the banks are facilitating this through correspondence banking, and it makes sense because the values are large. But when it comes to individual transactions, that is where I would say a lot needs to be done. And I cannot say or that it's bound to work or it's bound to fail, because I understand that it's a journey and it calls for different stakeholders. It calls for a lot of collaboration in the space, speaking to the PUBs and other stakeholders, the fintech players, the banks involved, to look at how they can come together and drive interoperability to ensure that infrastructure speaks to the transactions that you and I can make across border.
All right, let me turn to Aro now in Abuja studio. Aro, since you came back with this experience, have you had a word with your bank, customer service? In case you want to travel another time, do you have an alternative of what you could do to ease your travels around Africa?
And that's the funny thing. Before I traveled, I spoke to one of my bankers and he said my Visa card could work. That means even people who work within the banking sector don't even know that the Visa card doesn't work in some places. And the other alternative I was given was to now get a dollar card. So they are expecting everybody to have a domiciliary account. So anytime you want to travel, you use that card. So that card would work. That's what I was told, but if it's coming from a Nigerian bank, it might just be the same thing. But my question is, this same card worked before. So what made it work before and why can't it work now? And when we are talking about, like from the last regime, we started talking about digital economy, because the same challenge, we've had the same challenge trying to pay things online. If it's subscription for things as simple as your Microsoft Word, not even talking about other transactions you do online. There are people who are supposed to be making some money using social media pages. They are not able to because of this same situation. And no word from the government. I've not seen, anything, anybody come out there to say, hey, ordinary Nigerian, this is what you could do. There were lots of Nigerians that went to Ghana this weekend. And a lot of them had to spend dollars. The same dollar we are talking about that the pressure is too much on. I decided to use Airpeace because it's Nigerian. And guess what? It saved me about 200,000 naira or more, on the airfare. I have done my part as a citizen, buying Nigeria, and all that, but I couldn't use my card to do any other thing. For my connecting flight from Kumasi, from Accra to Kumasi and Kumasi back to Accra, I had to contact my friend in the US to pay for me. And this is Nigeria and Ghana. They drop you in Ghana in the middle of the day. You'll think you're in Nigeria. There's no difference between Nigeria and Ghana. And it's really strange. And the banking industry, I'm speaking to bankers here, they are not really educating us on what to do. They just like to take our money, keep our money. I tried Stanbic Bank there, it's there. There's Standard Chartered there, there's UBA there, you name it. These are banks, our same banks here are there. So why is it that difficult? Why is it difficult to educate Nigerians when someone is opening an account or running a current account or getting a visa? You're able to educate the person on what to do so people don't get to places and get stranded. And then we don't put unnecessary pressure on the dollar.
Yeah, so Jacqueline, what would you advise anybody like Aro now? I want to travel to do, I know you said the bulk and the big retail are being taken care of. But for people like us, you and I, who just want to travel, spend a day or two outside within the continent, how can we survive? What should we be doing?
Well said. I think from my understanding, first of all, to answer his question as to why initially he was able to do this transaction and currently he is not, it's because of a policy change. Remember, when I started talking, I said that there are many factors that are contributing to the challenges around making cross-border payments. Some of them are regulatory induced. And what I mean by this is, in the case of Nigeria right now, what happened was initially you were able to use your Naira card in making transactions out of the borders of Nigeria. And then came this policy review, and it's attributed to plunge in the foreign exchange revenue, leading to parallel foreign exchange markets and also some pressure in the formal cross-border payment industry. The challenge here really is the settlement, because initially the Central Bank of Nigeria was provided some cushioning in terms of settlement of transactions in foreign currency, because the foreign currency was there. But now that there's a shortage, it has made the policymakers to review this policy, to revise this policy, to speak to putting restrictions to the use of the local card internationally because of these tight exchange rate controls, and therefore you're not able to use the Naira card. Now, I've seen a coping mechanism happening right now in Nigeria, because from colleagues and in the industry at large. And the coping mechanism is to have a domiciliary dollar account in Nigeria. And therefore, when you're traveling, you would use your card that is associated with this USD account. And because this is a policy implication, it calls for, watching out for the financial service providers to educate the users, that is the UNIs, in terms of how they should, what are the coping mechanisms around these restrictions in the local card. So I think there's a gap in terms of how the financial service providers are educating the general public that, look, this was enabled when there was high foreign exchange revenue, but now the foreign exchange revenue is low. This is how we should go about it, and not just allow them to open Naira accounts, and at the same time they're not able to make transactions across borders. I think there's a part for the financial service providers to play, that is the banks, to play in consumer awareness of the realities of these changes in policy.
All right, thank you so much for that, Jacqueline Juma. And we hope that the financial institutions will come in there, for enlightenment of members of the public. So thank you so much, Jacqueline Juma, Director, Advocacy and Capacity Development at Africa Nenda, and Aro Leonard, founder of Clivario Communications, for sharing your experience with us.
Thank you.
Thank you very much.
All right, let's head to the markets now and see how the numbers look at intraday. We begin, of course, with Nigeria, the NGX. We see that it's a recovery in the green, almost 0.5%. If we could have the numbers right there, at 0.48%, at 99,227. At intraday, I think we shouldn't get too excited, because we've learned now that we could see the NGX green at intraday, and by the close of trade, the color has changed. It's still not a bull run at the NGX. We've enjoyed that for a bit. So it's 0.48% in the green at 99,227. At least we've recovered back to 99,000. But this is so close that anything could happen. We could hit back to 98,000. South Africa is back at 73,000. It lost this level and was at 72 most of last week. It gained 0.42% at intraday. If we could see the other markets, Egypt is very positive, 1.78% at 29,576.28, while Kenya, this is Friday's close. We discussed Kenya elaborately on Friday as to what's happening with that market. So the investor sentiment around there, and it seems like in Nigeria, the NSE, that's the Nairobi Stock Exchange, does not really capture the investor sentiment or the economic gauge, as they say. The stock market is supposed to tell the economic gauge of a country, but it doesn't really work that way, according to the analysts we spoke to on Friday. 93.25% is what we have for Kenya, up 0.85%. That's Friday. Before we leave here, let's stick to Nigeria and look at our auction. There was an auction last week. Of course, more of the government's effort back here in Nigeria to mop up the cash liquidity in circulation, and they've been doing that through a lot of instruments, the treasury bill, the bond, and the auction. So there was an auction. The result was out on Friday. We have Bosun Bembe now from Access Bank, fixed income dealer with Access Bank, to give us the details of that. Hi, Bosun. Good afternoon.
Thank you for having me.
Good to have you, Bosun. So tell us about that auction on Friday, the details of it. We heard it was oversubscribed.
Yes, you're right. It was oversubscribed. So we saw a subscription of over 1 trillion. You know, we've got into this era of 1 trillion every time there is an auction, both NTP or OMO auction. So the day before the auction, there was a meeting between the CBN and foreign portfolio investor, where the CBN governor promised that there will be frequent issuance of OMO bills. And the next day, the OMO auction happened. And what was surprising about the OMO was the volume. Despite the fact that the market was in repo, we saw subscription of over 1 trillion on the 361-day paper, and the stop rate increased significantly, so to 21.5% on the long tenor paper. So the stop rate on the 179 paper closed at 19.5, while on the 95 it closed at 19%. So 21.5% discount rate implies about 27% yield. That is fantastic. So this is a way the CBN is trying to entice a foreign portfolio investor. At the meeting that the governor had with the foreign portfolio investor, the governor promised then there will be a positive real return. So, and this is the way to get these investors to get positive real return. Inflation is at 29 levels, and the yield on this instrument is about 27. So we're almost closing that gap. So I think it's a very good one. Most of the things that the foreign portfolio investor they've asked for, the governor has done his part, and I think we started seeing the result on Friday on the FX. We have a lot of inflows because the settlement for this auction is same day. So we expect that this week there will be an NTB auction, given that the CBN and DMO, they now work together. So we expect that at this NTB auction, the previous one closed at 19. So we expect similar increase in the NTB auction that will happen on Wednesday. So the stop rate there should get close. So if it's not 21.5, at least we're expecting like a 21%.
Yeah, so there's still a negative right there, you know, because inflation is at 29.9, and you still have the rates lower than that. That's still a discouraging factor. Do you see the yields hitting the inflation rate? That would be, I mean, even if it's at par.
I think at least if you compare the gap to what we used to have, this is a significant improvement. So about 2% negative rate return. I don't think it's something that should be a discouragement, in my opinion. And when you look at, by the time we start seeing the impact of the CBN policies on the inflation, though, you know, inflation is a lagging indicator. So you might not see the impact now. Probably by April, you might start to see the April or May inflation will start trending down. So I think the yield is fantastic, 27%. Even if you are lending to corporate, most of the corporate will not be able to borrow at 27%. So, and the government is willing to borrow at 27%. I think is a good one, and there is no excuse for maybe a portfolio investor that is looking to do carry trade. There is no excuse for them not to come. The only thing they can say maybe the onshore NDF that we used to have before, which they can use to hedge their FS risk, that is not yet available. But there is offshore NDF for them that they can actually buy to hedge any FS with them, mainly from the carry trade.
Well, obviously, we'll be looking to see the result of that, especially, I mean, we're looking for FX from everywhere. So if it comes from this quarter, obviously, we'll be glad. But thank you so much, Bosun Bembe, for sharing your thoughts and perspective with us this afternoon.
Thank you for having me.
So we go back to the market to look at the numbers for Middle East. We see it's slightly, that's for Abu Dhabi, slightly in the negative 0.01%. Dubai is also negative 0.75% at 4,323.72. Saudi Arabia, Qatar also in the red. It's a red Middle East market at intraday, 0.67% for Saudi Arabia, while Qatar is slightly, very marginal there, 0.02% at 10,473.04. We move from the Middle East to the United States, where stock futures were just a little changed on Monday after the tech-heavy NASDAQ composite posted a record high on Friday, breaking its 2021 record as stocks attempted to continue their weeks-long rally. The Dow Jones in the red, S&P in the red, and there you have, that's almighty NASDAQ with all of the tech guys there also in the red. Red features for the markets in the United States. Right there, stocks have been racing higher, fueled by enthusiasm over artificial intelligence. And you know that the NASDAQ has the attention, soaring to an all-time high on Friday, making it the last of the major stock indexes to reach a record close this year. Well, from there, let's move over to Asia. Asia, that market is closed, and we've been celebrating the Nikkei for some weeks now. We're hoping this will happen on Friday, but it did happen today. The Nikkei went just within less than 3 weeks. It's gone from 38 to 39, and now it's hit a new high at 40,109.23 for the Nikkei. Right there, it's up 0.50% at the close of trade on Monday. Kospi is also in the green, but no new highs right there, 1.21%. The Hang Seng Index is slightly up at the close of trade. We look at other market, therefore Australia and Shanghai, it's mixed. Australia is in the red 0.13%, and Shanghai is in the green 0.41%. Let's move over to Berlin now, where Germany's biggest car maker, Volkswagen, has warned of slower growth expected for 2024 amid economic slowdown. So yes, it's not just in Nigeria, it's happening in other parts of the world. But let's have Chip now. Chiponda Chimbelu joins us with the details of why Volkswagen is coming up at this time to give this forecast.
Thanks for having me. Volkswagen said it expects slower growth for 2024 because of weak economic conditions and intense competition. Now, Germany's biggest car maker estimates sales will grow 5% in 2024 as it continues to invest in electrification and digitalization of its product range. That sales growth projection is significantly lower than the sales seen in 2023. Last year, VW sales rose 15% on the year. Volkswagen was able to increase deliveries to Europe and North America, and it also increased the share of electric vehicles in its production. But despite making some progress in the transition to electric vehicles, Volkswagen's forecast for this year is muted. A lot of the headwind is coming from China, and there are many challenges there. The downturn in China means that Volkswagen isn't seeing much growth there. And because of that, Germany's car makers and its peers here are also likely to see more competition. Chinese car makers, which are the global leaders in the electric vehicle industry, will want to expand their market share in Europe to compensate for China's downturn.
So what else is Volkswagen saying about the rest of the year?
Well, Volkswagen mentioned the intensity of the competition, and that is especially true of the electric vehicle market, which is, of course, a segment in which VW is trying to expand its business. We have seen electric vehicle makers like Tesla and BYD cut prices. So it is highly likely that European car makers like Volkswagen will be forced to do the same to remain competitive, especially as their Chinese peers expand in Europe to offset China's economic slowdown. Profit margins are likely to be smaller if price cuts continue, and VW will need other measures to remain profitable. Now, towards the end of last year, Volkswagen said it would cut jobs as part of its cost-cutting measures. It's something we are seeing across the industry. In fact, two of the world's biggest auto suppliers, Bosch and Continental, have also announced job cuts.
Well, let's head to the markets now. What are we expecting from there?
Any European stocks are expected to trade higher today. Investors will be keeping an eye on the annual meeting of China's legislature, that is the National People's Congress. They'll be looking out for what Beijing plans to do to revive its slowing economy and to salvage the property market. And in terms of company news, Volkswagen is reportedly deferring the IPO of its battery unit Power Co. Now, at least we'll do that for another 2 years. So now that's a decision, of course, that shows the importance of the battery market as Germany's biggest car maker works on increasing the share of electric vehicles in its output.
All right, Chip, thank you so much. It's just the beginning of the week. We'll see what Volkswagen will say for the rest of the week and how their outlook will close. So let's come back to Africa now. The chairman in Nigeria, the chairman of the Senate Committee on ICT and Cybercrime, Senator Afolabi Salisu, on the sidelines of an event he attended in Lagos, Silverbird Man of the Year 2023 at Eko Hotels, revealed that the integration of the National Identification Number, NIN, and the bank verification number emerged from deliberations conducted in a closed-door session with the security chiefs, service chiefs, and the National Security Advisor. The senator says that the decision materialized in response to urgent necessity to combat kidnapping and cyber crimes.
You will recollect that the Senate had a closed-door meeting with the security agencies, the service chiefs. All the service chiefs, including the National Security Advisor, about a few weeks ago. Of course, you know, I won't be at liberty to divulge some of the issues that have been discussed, but certainly technology is going to play a very significant role. And you can see the move towards that. The Ministry of Communication and Digital Economy, particularly NCC, just give that instruction that you must have your telephone number linked to your name. If that does not happen, the phone number will be dropped. What this means is that technology has become part of our life. It's being used for the good, it's also being used for bad things. But once you can identify you, which is the essence of linking the national identification number with telephone numbers, it will reduce drastically crimes. There are also a number of other initiatives that are ongoing that I may not be able to discuss now, but certainly I can assure you that technology is being deployed now to solve some of our security challenges. And you would notice that of recent, our security agencies have been arresting, they've been nabbing, kidnap kingpins and other people who are into violent crimes. It is the use of technology. I can expect more and more of that to come in the next few days and few months, to the point that it will drastically reduce the crime rate that we have in the country. So certainly, and the Committee on ICT and Cyber Security, we're engaging the stakeholders. We're engaging the stakeholders because, as I mentioned to you, most crimes are committed through technology.
Yes, most crimes are committed through technology, and if technology is used to curb those crimes, it will be to the pleasure of everyone. We move to Ghana, where the government there has announced plans to establish a $450 million refinery aimed at refining locally produced manganese. The initiative was unveiled alongside a legislative move to ban the export of raw bauxite, signaling a shift towards value addition within the country's mining sector. President Nana Akufo-Addo told Parliament that these measures are aimed at fostering economic growth and ensuring optimal utilization of Ghana's mineral resources. Acknowledging achievements in the mining sector, Mr. Akufo-Addo celebrates Ghana's reclamation of its position as Africa's leading gold producer, citing policies that have revitalized dormant mines and spurred growth in the small-scale mining sector. Notable among these policies is the reduction of withholding tax on unprocessed gold, which has led to a significant increase in gold export from small-scale miners. In South Africa, Companies and Intellectual Property Commission, CIPC, has reported a significant security breach. Personal information was unlawfully accessed and exposed, and the Commission was forced to inform people about the security compromise because of the Protection of Personal Information Act. The breach comprised the personal data of both clients and employees stored in the CIPC records. Analysts suggest that this incident highlights broader concerns about cybersecurity infrastructure in South Africa.
The full extent of the hack is not yet known. Obviously, part of the major risk is that once that personal information is in criminals' hands, they can use it to go and steal money from bank accounts, to go and make sort of shadow businesses using someone else's identity. Identity theft can also be used to borrow. So there's a range of possibilities, and given that it's information coming out of a patent office, the assumption is that the persons that are being compromised are fairly high net worth individuals, prime targets, as a hacker might conceive of them. This is part of a bigger problem in South Africa. It was grey listed over a year ago for not having the proper requirements in cybersecurity to stop illicit funding of terrorism and flows, financial flows of that nature. Recently joined by Kenya and Namibia. I think part of the problem is that even if fairly decent cybersecurity is installed locally, you're competing with the best in the world, because the internet makes the world really into a little village. So a hacker that's on the other side of the world, in a way, is just next door if he's or she's trying to breach into your cyber treasure chest. In terms of the bigger picture impact, it's part of a bigger problem in South Africa of crime, of unaccountability. I don't think South Africans have much realistic expectation that there'll be accountability for this. South Africa, of course, famous was home to the world's biggest Bitcoin hack. Billions of dollars vanished, and nothing has really changed in terms of the system here to prevent that kind of thing from happening again. So we've got a bit of a systemic problem. Ultimately comes down to political accountability. And in the meanwhile, I think that the best solution to this for private sector players, for normal people, is to unfortunately have to double down on their own cybersecurity, to be vigilant, and probably to hire teams, private teams, to help defend them against the pirates of the new seas, the new high seas, the internet.
All right, cybersecurity, one of the top threats to businesses in the year 2024, obviously because of the expansion of the use of technology and AI. So it also comes with that downside. And every country and individual ought to protect itself. Now, let's move over to crypto space. Right there, it's been an exciting couple of days in the crypto space, especially here in Nigeria, from stories of arrest and detainment and fines and no fines. But Ladi should have more information. So Ladi Williams walks in now. Ladi, I wonder what you have been able to confirm or not confirm. I did hear that some executive of Binance are having a meeting with the Nigerian government in Abuja. So you cannot sleep tonight because you're going to have hot stories coming from that meeting.
So
we
much
have a lot of things to confirm, Last week there was this big one that I can't even say here. I don't know, it's somebody's suggestion and then everybody's running around with it.
$10 billion.
I didn't say it.
Yeah, you didn't say it, but it's out there, at this point. And definitely we're seeing a lot of reactions to all of that information we're getting right there about the P2P market. But on the other side, we're seeing bullish sentiment right there in the crypto market, 65,000. I wasn't sure I was going to see this price this soon, but it's here. It's there. It's about how much? $2,000 or $3,000 shy of the previous high we had before in this market. 5.58%. That's a big move there this afternoon. Ethereum is also doing good, $3,500. We see other altcoins in deep green. And one of the meme coins, Shiba Inu, not doing so badly up there, up about over 100% in the past couple of days. Let's look at the top 50 currencies we track now and the sentiment in the market. If we look at the sentiment in the market, there's still a very, very greedy market. Let's bring in Chimeze Chuta now as a founder, coordinator, Blockchain Nigeria user group, joining me via Zoom. Great to have you on the show.
Yeah, good morning, Ladi. Always a pleasure to join you.
Great to have you, Chimeze. So definitely, as my colleague there said, she talked about all the drama we've seen in the crypto space in Nigeria. And definitely we see Binance there being accused of manipulating the exchange rate in favor of the US dollar, and we see what they call the speculators in that market being blamed for betting against the Naira. How are you seeing all of this play out?
Yeah, it's really an exciting time, and I think it's possible that Binance could have done things a little bit different to control that, because we are talking about a national currency here, okay? But by and large, everyone knows that speculation of assets, whether it's real estate, whether it's gold, silver, whether it's digital assets, whether it's crypto, is something that is out there. In fact, that's what makes the market very interesting for participants. So I look forward to a better management system being put by not just Binance, but several other exchanges that operate in Nigeria to curtail and limit the over excitement that people get into when it comes to speculation. It happens. Even today, everybody knows that properties in the island area of Lagos, whether it's Lekki, whether it's Ajah or any of those areas, they are extremely highly speculative, indeed. So it happens everywhere. So I think with the measures that central bank is carrying out right now, and of course, one expects and hopes that the entire industry will be brought into a regulatory environment to clearly define for operators how they should do certain things that has to do with it, especially when it has to do with national security and our economy. Regulation is inevitable, and we've been talking about this for years, and we've been expecting government agencies that are responsible for these kinds of regulation, whether it's Security and Exchange Commission Nigeria or the Central Bank of Nigeria or National Agency for Technology Development. We'll expect all these agencies to have a roundtable discussion with industry participants and stakeholders, especially the associations that are in the country driving these adoptions over the past few years.
And with what you're saying with the P2P market, how do you see, how are you going to see all of this, or what are you forecasting will be the resolution to these issues that we see with Binance?
On one hand, I'm extremely bullish that government will take advantage, because I, to be honest with you, I think the government, this new government, started on a very good note by trying to review the previous circular from CBN that banned crypto companies from accessing banking services. So I think they started on a very good note. I think they will do better in managing this current situation, thereby opening up Nigeria to the huge economic opportunities that blockchain and crypto offers. This, I mean, the crypto market alone is a $2.5 trillion in the industry, sorry. $2.5 trillion, and that's a huge amount of money to exclude Nigerians from participation. And aside from the crypto, there are a whole lot of other things that the technology itself can be done with, okay? We talk about real estate and all that. So let the current challenge that is going on with Binance and the crypto Naira speculation not stop the government and our agencies from, opening their eyes to the numerous opportunities that blue technology, which is the backbone of some of these things that we are talking about, has huge potential for us in Nigeria. It has huge potential for the young people in Nigeria. Currently, hundreds of thousands of people are earning money, and this is what government really wants. So they shouldn't be against it. They want us to earn dollars. They want us to earn foreign exchange, and young people are doing so massively. So they shouldn't turn around and find a way to stop them from doing that. We are directly involved in drawing in foreign direct investment into this country. It should be encouraged. What we are doing should be encouraged. It should not in any way be, treated as though we are not adding value. We are adding huge value from an industry perspective.
And talking about adding value, we did hear from the central bank governor that about $26 billion has been siphoned out of the country, through, Binance alone. And I'm wondering if there's any data to show how much has actually come in, to the country through Binance.
It's possible. I'm not privy to Binance internal data set and information that could be used to prove that. But I can tell you for free that a whole lot of transactions go on in crypto every single day. before now, we had one of our industry engagement with Securities and Exchange Commission about 3 years ago, and we showed them data from certain websites to prove that every week Nigerians were doing up to 24 billion naira in crypto transactions. That was 3 years ago. So if we're seeing $26 billion in a year in Nigeria, I'm not surprised. But again, you have to understand that it doesn't mean that that money is with Binance. Binance basically created a platform where people can do these transactions. P2P is part of the dream that Satoshi Nakamoto put up there for crypto transactions, P2P. So it's not as though Binance takes this money and puts in their coffers. No, it enables human beings. But let it be clear that nobody uses Binance or any blockchain-enabled centralized exchange without fully KYCing themselves. And these exchanges have inbuilt money laundering mechanisms. And remember that the monies can't come into this exchange except they pass through the bank. So the banks are the onboarding partner to cryptos in Nigeria. They can't shy away from that. So by the time the government begins to look into the exchanges without looking at the banks, then they are not balanced in their assessment. So they need to also look at the banks, whether they also have the measures, the KYCs, the anti-money laundering system that are in place to be able to provide the data. Because if they really do, then it shouldn't be a problem. You call for this information and they will present it to you.
All right.
But again, remember that Binance is not also being regulated because crypto is not yet being regulated in Nigeria. Until that is done, we won't say that we'll have taken care of the problem completely.
All right, Chimeze, I guess we'll leave it there and be waiting for the outcome of the meeting between the federal government and some of these Binance representatives. Thank you so much for coming on, Chimeze Chuta, founder, coordinator, Blockchain Nigeria User Group. Thank you so much. All right, let's get to the quick headline. Just a quick one now with the headlines for the show today. We see about 97% of Bitcoin wallet addresses are in profit right now. And being in profit means most of these addresses bought Bitcoin lower than the price that we have right now. So 97% in profit. Then we see the US dollar trading in a tight range. And we know we have that inverse relationship between the US dollar and risk assets. Then luxury watch sales. There's reports showing that luxury watch sales might actually boom at this time. Very interesting one there. And they're hoping that with the gain some of these wallets have made, at some point, they're going to go and buy some of these expensive timepieces with some of their profits. So, Ini, there you have it.
I'm going to be watching out for your wrists. My eyes will be on your wrists.
I don't like luxury watches, but who knows?
I don't believe you yet until I see your wallet and know the profit.
Quite interesting. So this market is hoping that, these crypto traders have made so much profit.
And
come into that market
and buy all cars, not houses, but watches.
Well, we know they like Lamborghinis in that market, so they're always talking about Lambos and all of that. But we'll see.
We'll see, Ladi. And of course, we'll see the end of that meeting
Exactly.
tonight. Thank you so much.
Thank you.
All right, so that's it on Business Incorporated. It's just the first one for the week. There are 4 more episodes to go, so you don't want to miss it. Tomorrow I'll be back 1 p.m. Ladi will be back 10 a.m. So you want to know everything that's happening in the world of business, this is where you should be. You can also go to our YouTube channel, www.youtube.com/channelsweb. Check out Business Morning, check out Business Incorporated, and you get the full gist. But I'll be back 10 p.m. Stock market reports. Fingers crossed the NGX will be positive.